Welcome. Thanks for coming to today's class. I'd like to just spend a second thanking Investors Inspiration for having me out. Let me introduce myself to you just a little bit. It's interesting that I'm following Steve Bigelow. Really like Steve. He's got some great techniques to the market. One of the things I'm in charge of here is I'm in charge of our business development, and several years ago I reached out to Steve and we created a product together that actually analyzes his candle patterns and allows you to scan for them, and it's a product that's not just been successful. It's probably been one of our most successful products that we've had in years, and actually has been rated #1 as an add-on or in the top, like, let's say 4 or 5 of all add-on products, according to Stocks and Commodities magazine. So in any case, just to kind of give you a little bit of an intro to me, I've worked for Metastock for 20 years. In March. I'll complete year number 20. It's a great place to work. I love it. I started in inside sales, so a lot of people, if they had questions, they'd talk to me. I'd ask them about what they wanted to improve about their trading, and it's a pretty good toolbox. Does a lot of things, but then just kind of talk to them a little bit about what they were looking to do, and whether that was like find better trading strategies or find better stocks to trade, or test trading ideas and that kind of stuff. For the last 10 years, I've been actually in charge of all of our business development worldwide, and we have about 100 dealers worldwide, and I travel around the world and I meet them. Call people like Steve Bigelow, like some of the experts that are here, and talk to them about integrating their products into what we already are doing, and it's a lot of fun, to be frank about it. I absolutely enjoy it. So that's me. If you have questions as we go, we have a few extra minutes. I can go for as long as I need to or as short as I need to, but if you have questions as we go, please make sure you chime in, and I'll be happy to kind of answer them to the best of my ability. And let's get underway, shall we? Okay, so the first thing I need to do is I need to read this out loud. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Whew. I've only said that like 300 times. Anyway, I want to tell you a little bit about Metastock. I'm sure a lot of you are familiar with Metastock. Just by show of hands, I'm going to ask you how many people here use Metastock, and if you can just say yes in the chat room, I'll kind of keep an eye on it. If you don't, that's fine. Just want to see how many Metastock users we've got out there. Mike, Tom, okay, good. So just to kind of give you, starting today, Kenny, I just talked to you like 20 minutes ago. Welcome to the class. Anyway, just to give you an idea, we're a software company. We started here in Salt Lake City, Utah back in 1982. I'm not going to read all these bullets out. You can read them if you want to. When I started, though, it was about 20 years ago, as we just discussed. It was a Reuters-owned company, and a few years ago, I want to say about 3 years ago, we actually purchased ourselves back from Thomson Reuters. We have a great relationship with Thomson Reuters still, probably better than when we were owned by Thomson Reuters, but we've had some pretty good advantages of kind of with our partnership with Reuters over the years, and that's the fact that we can provide all of their news and data as part of what we offer. If you're not familiar with Reuters, it's a $19 billion a year company. Mostly what they do is sell their news and data to brokerages and institutions, hedge funds, stuff like that. In fact, it's about 90% of their revenue. And so we've been able to kind of use what they do to power our software with just about anything you want, whether it's stuff that's here in the US or over in Europe or in the Middle East or Forex or futures. It's a ridiculous data that they cover, 95% of the global market cap. And so we've been able to kind of expand our business into a lot of different countries. Like I said, we have about 100 dealers worldwide. Um, and it's just been a pretty good fit. We've also been allowed to sell their data to retail traders and their news. They have a product that they spent about $1 billion creating, and we sell it for a fraction of the price of what they sell it. So if you're interested in news, you might want to check it out. It's called Zenith. So one of the things that I want to say before we get to the class, and we're just about to get to the class, I do like to let you know that we've been around for a little bit of time and that we've been in business for a little bit of time. But for every year since 1993, which is the year after I graduated high school, every year since 1993, Metastock's actually been rated #1 in its price category by the readers of Stocks and Commodities magazine. We're pretty proud of that. We get a lot of awards. We just got another one for a Forex provider that I got in the mail when I got back from Los Angeles this Monday, yesterday. So we're pretty proud of that. It's a great little software package. And there's a lot of things that I could talk to you about. I mean, there's a lot of things that I'm not going to cover today just simply because we've got 45 minutes. But what I wanted to do, this is one of my favorite classes. I just want to kind of talk to you about a simple method in Metastock for trading with the trend. There is a lot of stuff that I could talk to you about. I could talk to you about all the news that we offer, the scanning that we do, the testing of trading ideas, the forecasting, the expert advisor. There's a lot of stuff. It's a huge product. It really is. We've been working on it since the 80s. But what I want to do is I want to kind of talk to you about a method that's built into Metastock. It's a very small focus today, but one that is a good one. This is the method that I actually used to take my very first trade, and I still use it very, very religiously. And it's called the RMO method. RMO stands for Rahul Mohindar Oscillator. In case you don't know who he is, I'm going to tell you who he is. He's our dealer in India. Very nice guy. He's coming out to our office here in a few weeks. I'm going to look forward to seeing him. But he was in our office about, let's say, 10 years ago or so. That was a while back. And we asked him what he teaches people in India to trade, because he's selling a ton of Metastock for us. And he showed us this methodology. We actually ended up liking it a lot. And we actually purchased rights for it. And ever since Metastock, like 10 or so, we've included this just for free in Metastock. It's something that you can use right out of the box. So, and the reason I like to talk about it, again, there's just so much I could talk about with Metastock. And at the end of today's class, I'm going to give you a really good offer to try Metastock for like 3 months' time. But what I want to do is I want to show you something that's pretty easy to implement, totally objective, uses solid money management, and something that you can use right out of the box. It's going to help you make money. So that's why, and again, we could talk about some of the other 40 systems that are in Metastock. There's just only so much time that we've got, but what I want to do is I want to give you something that you can take the extended trial with, and as you're learning Metastock, this will help you make money out of it. So it is a trend following system. I'm sure you've heard the trend is your friend probably today until the bend at the end or rising tide lifts all boat or befriend the trend or whatever, you know. So what we've got here is a very objective way of following the trend. And it's a 3-step process. We're going to look at it on a few things. But if we want to be able to follow the trend, what we want to be able to do is we want to identify the trend. And when Rahul talks about this method, we really talk about 3 different trends. We talk about a primary trend, a prevailing trend, a major trend. And really what we're talking about when we say words like that, primary, prevailing, we're talking about a long-term trend. Okay, so I'm going to go ahead and switch into my Metastock program right here. I've got a chart of Apple up. I've got a chart of Nike over here on the side. I'm going to show you exactly how to analyze what the long-term trends of these particular stocks are, according to the way Rahul does it. Okay, so let's go ahead and focus on Nike real quick. And what I'm going to do, we're going to kind of go through this chart, the whole thing. Right, but what we want to do is we want to focus on kind of the Rahul Mohindar oscillator, this RMO oscillator first. This is our measurement of the long-term trend. Okay, so I'm going to go ahead and make it full screen. I'm just going to go ahead and blast it up to full screen right here. And so this is our primary trend indicator. Okay. The way we kind of read it is very, very simple. I'm going to go ahead and put a 0 line right on here. Just grab my little horizontal line tool in Metastock. I'm going to put a line right at 0. Okay. The way we read this is it's either above 0 or below 0. Okay, and this is our reading of our primary trend. So right now, if we're looking at Nike, we want to place a trade on Nike. What we want to do is we want to look at this first. What is the trend? What is the major trend telling us? What is the long-term trend telling us? If it's below 0, then right now, from a long-term trend perspective, we're bearish. Okay. If it's above 0, which it was just for about a few weeks right here, right in about September, August area. If it's above 0, then it's bullish. Okay. So right now, though, and ever since right about here, I'd say 9.6, it's been in a bearish trend. Okay, long term. Okay. So what does that mean? Well, if it's bearish and we want to trade with the trend, we're not going to take any long positions in Nike. It's not necessarily our trigger to get into the market. This is step 1. We've got 3 steps that we're going to go through. This is basically what this means is as long as it's down here below in a bearish zone, what we're going to do is we're going to look only to take short positions. Okay? That's it. Okay? We're not going to go long because we don't want to trade against the trend. Right now, if we're looking at it from a very objective point of view, in other words, we're not trying to guess on any of this stuff. It's very obvious this is below 0. Right now, if we're looking to take a trade right now, what we're going to be looking at is we're only going to be identifying short-term trades that we can take. Is that clear? Again, if you have questions, feel free to kind of chime in. I'll be more than happy to answer them as we go along. Okay. So what I'm going to do is just kind of show you one other thing on the chart. Again, just to kind of reiterate that rule. I sometimes repeat myself too much. But if we're down below 0, then we're bearish. If we're bearish, we're only looking to take short-term trends. Or we're only looking to place short or trades. We're not allowed to take a long trade. Okay? Yes, Josie, that's right. So a short trade to the downside. Okay? And is what we would be looking at this. The other thing that we've done kind of with his methodology is you'll notice down here at the bottom of the chart it says that the RMO is either bearish or bullish or bearish, and that just corresponds with this indicator. So if you want to, you can look at this according to our rules that we're looking at right now. Starting on this day, we would have only been looking at bearish trades. Okay, cool. And then I have this again in a PowerPoint, but if the RMO is in a bullish zone, we're allowed to buy. You're not allowed to short. And again, not a trigger to enter. You don't just take a short position because it just drops down below the 0. This is just step 1 of the identify the primary trend. Okay. The next thing that we want to do, because there's obviously going to be more steps, is we want to identify the short-term trend. Okay. And so let me go back into Metastock. It's equally simple to kind of do. Right now we're going to identify and we're going to look at swing trade number 2 and swing trade number 3, Rahul's second and third indicator. Okay, just going to go ahead and move this down. I do like to kind of change this. If you want to change anything in Metastock, you just kind of double click on it is the easiest way. I'm going to make the blue line a line instead of a histogram. I just think it's a little bit easier to see that way. Personal preference. Okay. The second indicator, though, that we're going to look at right here is the purple indicator. He calls it swing trade number 2. Okay, I'm going to put the same 0 line. I'm just going to drag a 0 line right across here, and we read this the same way. You'll notice if we compared this to the other indicator, it's also above or below 0. You'll also notice that it's a lot faster to oscillate between 0 and above 0, and it's a lot more reactive, if you would, to market prices, and that's just because it's looking at a shorter time frame. I believe the calculation methods are the same. The analysis method is the same also. So in other words, if we're looking at this little purple indicator, we're going to look at it and we're going to see that it's below 0 right now. Okay, and if it's below 0 right now, we're going to also say, okay, well, on a shorter current time frame basis, and this is exactly where it crossed right here. On a shorter time frame basis, we're also bearish. Okay. So right now, if we're looking at Ike, or Nike. We can say from a long-term basis we're bearish, and from a short-term basis we're bearish. We want these to match, right? We don't want to be trading a bearish long-term trend and a bullish short-term trend. We want them to match. Okay, so now we can kind of take a look at this. If we're still looking to place a trade, it would still be to the short side. If we're looking at it right here and it's bullish long-term but bearish short-term, or bearish short long-term and bullish short-term, then we'll just wait until kind of the things come into alignment. We want to be trading with those trends. Okay, by trading with the trends, you're never going to hit the exact top or the exact bottom, but you'll be able to take nice substantial cuts out of the middle of those trends, and we'll show you how that works in a second. So just to kind of go back to the rules, we're bearish long-term, we're bearish short-term, we're still allowed to take a short position. Okay, so we've looked at our kind of our qualifications, and now we want to kind of get serious about identification of where to get into that trade and that kind of stuff. Before I do that, though, just want to take go back to the chart here, and you'll notice as soon as this went bearish short-term, we start to color the price bars red. Okay, if once it goes up above on that short-term trend, once it starts to get bullish, you'll notice that the color of the chart actually gets to be blue to tell you that the short-term trend is bullish. Okay, so you can either look at the indicators, you can look at the chart, whatever is easier for you. Any questions so far? We'll go through that rule one more time, and then I'll just show you how Rahul does his trading and his identification on it. So again, if you've got a primary trend that's bullish and a short-term trend that is bullish, you're still allowed to buy. You're still not allowed to short. If you're bearish, as we are on Nike, and bearish on Nike, primary and short-term, we're bearish, then we're still allowed to short, but we're not allowed to buy. Okay, and again, it's not a trigger. So we're going to talk about triggers right now. The important part of this is if they do not match, you are allowed to wait. You don't want to. You want to trade when trading is about putting the odds in your favor, putting the risk in your favor, and by trading when the conditions are right, it's like, much like weather forecasting. It's not going to be right 100% of the time, but by putting those odds in your favor, you put the time and time and time again, you're going to make money and not lose it. And you will have losing trades. Every methodology that exists is not right 100% of the time. Okay, so let's talk about a little bit about trigger identification. And to do that, what I'm going to do, I'm just looking at my time real quick here, make sure we're okay on time, and I think I have till 12:30 my time, which gives us a good time. Now what we're going to do is we're going to look right here, and we're kind of going to just show you how the triggers come into play. Okay, so if you remember from just a few minutes ago, this purple, pink, whatever indicator is measuring that short-term trend. The blue indicator is measuring the medium-term trend. So he's looking at primary being the long-term, short-term being the pink line here, and then the blue is the medium-term trend. And you'll notice that it's kind of about in the middle in terms of how receptive it is to price activity. The trick with this indicator, and so I want you to pay attention a little bit closely for the next few minutes, but the trick with this particular indicator, the blue line, is we do not care if it's above 0 or below 0. What we look at it is we look at the relationship of the blue line with the purple line. Okay? So, and let me get a little bit more specific right here. If we kind of went out and looked at the chart here, and I'm going to do that actually right here, when it starts to, the short-term trend starts to peak up right here, it's usually because price up. We're just measuring the trend, right? And then as price starts to fall down, what's going to happen is that short-term trend is going to start to go down, and eventually it's going to go bearish. Okay. At some point along when that happens, the red line is going to cross down below this this blue line. Okay. And Rahul calls that a change of momentum, or a shift in trend, or shift in direction. And really the way he uses that is a way to trigger into his trade. So in other words, if we get real bullish right here and the stock starts to come down, As soon as this crosses down below the medium-term trend, that is the trigger that we're looking for to get into the marketplace. Okay, so that cross actually happened. If you look at it really closely here, didn't mean to do that, but if you look at it really closely right here, it's right above that trend. Here is where the actual cross happened. Here it's above, here it's below. It's a simple cross, right? And when that happens, that's called a shift of momentum or a shift of force or a change of direction. He uses a lot of those terms interchangeably. But you'll also notice that when that shift happens to the downside, it's going to paint a red arrow on the chart for you. Okay? When it happens to the upside, it's going to paint a blue arrow on the chart. So again, right here you can kind of visually see where that happens on the chart. Now it's important to notice, and I'm just going to kind of get zoomed in on this chart, it's important to notice that if we get that shift of momentum, but we're still in a bullish trend up here, this, in other words, the short-term trend is still bullish, we're not allowed to trade, okay? And this will happen against the trends. What we're allowed to do is in step number 2, is we're allowed to wait. Because a lot of times what will happen is the price will pull back, it'll establish a new resistance area, and then it'll keep going on its initial trend. What we want to do is we want to identify when the trends have actually shifted over. Okay? And from a long-term perspective, we're already bearish. Okay? But our blue bar means that short-term, we're still a little bit bullish, and we want to wait until those match up. Okay? Make sense for everybody? Am I doing an okay job? All right. So what happens is we just wait on Nike. Okay? The very next day, it comes down a little bit, but it's still above 0, so we're still not allowed to trade. So we wait. Okay? And I'm not showing you a system here that got short at the very top, right? This is a trend-following system, which means you're going to give time for the trend to establish. One of my favorite sayings of all time was by Robert Deal, who's retired now, but a great technician. And he always used to say, he's the son of a preacher too, so he'd get pretty excited when he said it, but he'd say, bulls will make money, bears will make money, pigs will get slaughtered. And I think that's something that's important. I myself personally rather wait until the odds are in my favor of a good trade, because a lot of times, more often than not, what you have is you have a little bit of a pullback in an uptrend, and then it'll just keep right on rising. That's natural price activity. So this is where we're going to actually look to go ahead and place our trade. Okay. Raul's very specific about the way he teaches you how to do that. I'm going to go ahead and kind of zoom in just a little bit more here. Here's the first day that we can short now. Now we're allowed to short. Everything's in our favor towards shorting. Okay. And he's just got a couple of rules in terms of management places. So here's the first day. There's going to be a couple of lines that I draw on the chart. I'm going to go ahead and grab my horizontal line tool here. I'm going to look at the low for the day I'm going to, where I finally have permission to go short. I'm going to look at the low on the day before, and I'm going to place a horizontal line just a few pennies, just a little bit of white space right there. Okay. I'm going to do the same thing, but I'm going to look at the highs over here. Okay, so I'm going to look at the last several days, last few days. I'm going to put a horizontal line right above the recent price activity. Okay, now here's the rule, pretty simple. If we go below this price, we're going to go ahead and take a short position. So I'm going to go ahead and type in, let's just go over here, 5604. If it goes down below 5604, I'm going to go ahead and take a short position. That's it. Okay. As soon as I do that, well, I want to have a stop. I want to have a stop in place. Okay. So that's why I use this line. Okay. Up above this price activity, up above this recent high, I want to say, okay, well, this is my stop loss. Okay. I'm going to go ahead and put that in at about $58.43. Okay. Now, no, if I go short, it's going to be roughly around 56 bucks. If I get short, I'm going to cover that short position at $58. So now I have a pretty good idea of what, guys? My risk. In other words, I know that it's going to open up either somewhere below 56, which is what happened, right? I get in probably as close to the open as I can, which is 55.88, which is pretty close, okay? But I know, you know, it might gap up and it might get me out a little bit higher than 58.43, but unless this thing gets super bullish and gaps up huge, I have a pretty good idea that I'm going to risk about 5%, about $2 on a $50 stock. Is that right? Is my math right on that? Is that about 5%? 5%? I don't know. I'm just doing it in my head right now. Okay. And again, once I have this stop in place, it's about discipline. This is not a negotiable stop. You should put it in. We did a little bit of a conference over the weekend, and one of the guys that was speaking there said, well, you should put your stops in before you put in your order. I don't necessarily do that, but it's not a negotiable stop. Again, you want to be able to have discipline, because how many of you are guilty of moving your stops as you go along, right? Maybe it comes up here and you really just don't want to take the loss, right? And so, well, okay, well, maybe it should be 58.45 or 59, or maybe I'll just give it a little bit more room. I don't want to take that loss. It's called emotional trading. You shouldn't be doing it. You should be looking at an objective. And yes, you will take a 2-point loss at some points, okay? But what you want is to develop consistency. We're not here to say we're right every time. What we're here to say is, are we making money? Okay, that's the most important part. Okay, so anyway, I'll get off of that soapbox because we are kind of running into time now. Market opens up. Like I said, 55.88. We go ahead and put a stop in, order in. We've got it in. Right now we're still short. We haven't had a chance to move or adjust that position yet because none of those rules have kicked into play. Okay? And I'm going to go back and show you some historical examples. Right now, are we making money? We're making some pretty good money right now. I'm going to show you how, though, using this same chart, but some historical examples of how to kind of move your stops along. Any questions on the setup and kind of how to get into that trade and that kind of stuff? We'll go through it again. Okay. Let's go ahead and go back a little bit. Going to pop out. This trade actually did kind of work itself all the way through, so I'm just going to kind of look at this trade. We're going to go through the rules again, okay? And we'll go a little bit faster. I'll show you how it worked out on Apple, too. It's worked really well on Apple for a number of years, okay? So let's say we started to look at Nike right here. It's the same situation that we had before, right? It's in a bullish zone. It's pulled back a little bit. It's in a bullish zone, but we get a sell signal right here, okay? So we wait, okay? We wait until we get into that bearish zone. Notice that when we got this trigger in, we were bullish long-term and we were bullish short-term as well, okay? A few days later, you can tell by the red coloring of the bar, we were underneath in our short-term trend, okay? But our long-term trend is still bearish, or I'm sorry, bullish. So it's not until right here, this particular day, that we're allowed to go short, okay? Again, we want to make sure that the trigger, that everything kind of lines up. We're putting the odds in our favor, okay? As soon as we get everything kind of in our direction, we're going to go ahead and structure a trade. We'll structure a trade just like we did before, okay? What I'm going to do is I'm going to take a look at the lows here, okay? This is the lowest value. I'm just going to put a little bit of white space right here above that trade. They're right there below that bar. This is where I'm going to go short. Okay. Now with the high position, and this is a little bit more art than science, you could either come right here or right here. And I'd probably go right here just because, just to give myself a little bit more room. Here's where kind of the price started to turn around, and I'm going to say that's a pretty good resistance area. Okay. So again, let's take a look at the risk reward on this. If it goes below $61.06, we'll go ahead and take a short position. If we take that short position, it goes above 63.53, we're going to go ahead and get out of the trade and look for another one. Okay. The next day, we go ahead and take that short position. Very simple. We go ahead and put in that stop loss at the same time. Now, it doesn't initially fall. It kind of gets into kind of this congested area. We've seen a lot of these congested areas. In fact, it gets congested enough, it pulls back a little bit, kind of starts to come up. we actually get a change of momentum to the top side, which puts this blue arrow on the chart for us. Okay. Now, when this happens, it's a pretty good idea for you to actually kind of start to pay a little bit more attention to the chart, because if we go bullish short term and we go bullish long term, we're going to want to reverse our position. Our recipe for this market has changed, right? But in this particular case, the bearish trend continues to hold. Price starts to work itself down, and 2 days later, and we're looking at a daily chart. You can do this on whatever time frame you want. But 2 days later, we get a signal that the trend is continuing. We get that cross back down. Now, at this particular time, if you're not in a position, you could look at kind of restructuring a position. Rahul says you can add to your position. I'm not a fan of that. I like to kind of buy as many shares as I'm going to buy at the initial share, but he does say you can actually buy more if you want, or you could buy it short more if you want, and maybe that's a better way to say it. I'm not a fan of that. I would take the initial short position right here and not buy in all the way down. You can play with it, see how you like it. If that's what you want to do, I definitely go through a lot of trade examples and get an idea of how well that works, right? Okay, but one thing that you want to do here, now we've tested an area, it's come up in price, it's kind of set a new resistance area, and now it's starting to work back down. One thing that you'll definitely want to do every time you get a new arrow in the same direction and you're already in the trade is move your stop. Because what we had is we had a bit of a pullback. Price came up here, set a new resistance area. We're making money, not a lot, but a little bit, and now we think it's going to start going down. That's a moment in time where you want to move your stop down, okay? And you do it the same way. So right here, my stop initially was 63 bucks. I'm going to move it to right about here, right above this highest value in this recent upswing, okay? And now I'm going to say, well, you know, I'm still not making much money. 61, but I'm going to get out at 60, so I'll probably cover my commissions if it goes against me. But this is, I'm going to go ahead and move that stop loss up. Okay, stock continues to go down, which is good. We're great. We're short, right? We want it to go down. Again, what happens is it comes up, hits into some buyers, price comes back up. We have a bit of a change of momentum, so we start to pay a little bit closer attention to this trade because, again, we might want to reverse if things go bullish. They don't. What happens is we get another opportunity right here where the price pulls back. Now we've got this new resistance area. We're just going to set up a new stop right above. And where I put this stop, I'd put it in when this happens, when we get this little sell signal. I'd put it right above the price activity. Most of the time you're going to get out of this on one of these stops that you've moved, okay? And so now we're really happy. We've went from our entry price, which was $61, we've moved it down so where it's about $55.76 is where we're going to allow it to go. Price kind of does some chopping. It does go down. We get another, and this is very normal, especially when trends are changing. Price will start to get congested. It's moved, in this case, I'm going to say roughly about 12%. We get another opportunity here to move our stop. We probably wouldn't move it that much. I'd put it right above this price. But as we start to get sideways, what's going to happen is we're going to get opportunities again and again to move that stop. Okay. And what happens is we do stop out of that trade. In this particular example, we got in at about 61 bucks. We got out at about $55. So a fairly good trade. I'll show you guys a couple of things, just talking about this from a little bit of a longer term perspective. Let's just take a look at Nike on a bit of a longer term. For most of, I'd say, 2016, it's been a bearish trend. Certainly from the price drop that it's had recently to right now, it's been primarily bearish, even just by putting the direction or the trend in your favor and only taking shorts during this trend. And if we did take a trade here, we would have stopped out. We would have lost. It doesn't make money all the time. But it's fairly consistent as long as you are consistent. And everybody says discipline is the key. You know, follow your rules. It's amazing how many people, to me, don't follow their rules. What I'm providing you with is some very, very simple rules that allow you to take not the top to the bottom, but very significant moves outside of these pretty good trends. Looking back at Nike up until this year, it's been pretty bullish. Do you think it would be helpful if during this huge bullish movement you're only looking to take long trades and moving up your stop every time you have a new kind of shelf formed? It's a system that works really, really well. And like I said, it works consistent. I looked at the time. We're going to move a little bit quicker. It works very, very consistently. It's worked over the years on Apple. I did pull Apple. I don't think I'm going to have time to go into it in significant detail here. Right now, we just would have triggered just barely into a long trade with Apple. We'll see how that one works out. But again, just get this from a long-term perspective here. Okay, look at the big movements where you're bearish, or the big upward movements where you're bullish. Again, and they've been huge on Apple. You certainly have a lot of really good trends in Apple over the years, and the ability to just say, okay, well, right here I was bullish from April 23rd, where the price was well adjusted now, right, but $75, to where it eventually topped out at $130, and then you got bearish after that at about 128. By just kind of looking at some basic trend analysis and using good stops, again, it's just a good way to put the odds in your favor, okay, and build that consistency. That's what people really like. Okay, so again, the reasons I like to show that, I usually make a copy of this side. I could come in here, I could try and talk intelligently about all the systems that are built into Metastock or all the things that it does. But this is a really good objective system. At no point during the last half hour or so did I say, you know, what is Apple's phone doing? What is the fact that Yellen is probably going to rise the interest rate? What's that going to do? What we're doing is we're looking at the trend that exists and the price action that is there, and using a completely objective rule set, and not trying to make judgment calls, which have never been a good way for me personally to trade, because I always find that I want to take a trade. You might do the same as me, but I always find that I want to place a trade, and I can pretty much build the case that for any trade, if I stare hard at it enough, this allows me personally to have some completely objective rules that if I follow, makes me manage my money and makes me have my stops and stick to them. And it helps me build consistency. That's why I like to show this thing. Hope you like it. Try it out. It's cool. Sorry about that. I have a little bit of a cold that I'm getting over. So anyway, this is a small set of what Metastock can do, though. There is a reason that it's been rated #1 every single year since 1993. There's so much you can do. We kind of scratched the surface. You know, it'll scan the market. You can find opportunities. If you're kind of an advanced trader and you know a lot about technical indicators, it can help you test trading ideas and develop them out. It's a very, very substantive program, shall we say. On pricing, we have two versions of Metastock. We have a Metastock, the DC version. It's only $59 a month. It includes data. It's hourly updated. So DC, the difference between DC and RT, DC means daily charts, which means you can look at daily, weekly, monthly, quarterly, yearly, but you can't see the intraday bars. And it's only $60 a month. That includes the ability to test ideas. We have a really cool patent-pending forecaster you can use. It includes scanning, our expert advisor. It's basically the full Metastock platform. It's $59 a month, and that includes the data region of your choice. Okay. Now the data region. Sorry, the blue microphone that I'm using doesn't have a mute button. Otherwise, you wouldn't have to hear that. So, but the regions that Reuters had, I had to remember where I was, are North America, South America. Is one region, and that includes all the stocks, the futures, the commodities, and the FX data. There's also Europe, Middle East, and Africa. Again, that still includes the FX data. Yes, I'm fighting the urge to cough again. And then the other region is Asia Pacific. So everything that's in Asia Pacific. All of the regions include stocks and futures for that region. They also all include Forex data. Okay, and that's an hourly updated. It's not a streaming in there, and it'll update the bars every hour. It's a daily bar that it updates. $60 a month, not too bad. My goodness. Eventually, I'm going to get up. Bear with me. Eventually, I'm going to get this fur ball out, I guess. The real-time version has pretty much everything. The regions are the same. It's $250 a month. The big thing that includes is real-time data. There are some exchange fees that you may pay to get real-time data. For example, New York Stock Exchange, they want to charge you like $1 and I think 6 cents per month to get real-time data from them. Same is true with NASDAQ and Amex. Options are like $9 to get real-time. If you don't pay the real-time exchange fees, you still get 15-minute delay data on most exchanges. Okay. Forex is included. It's always real-time. And you also get the Thomson Reuters real-time news, which is really, really cool. One of the products that this includes is a product we call Icon. And it's, well, actually we call it Zenith. It's a white-labeled version of Icon. It's a product that Reuters has spent well over $1 billion developing. They developed it as a competitor to Bloomberg. If you're interested in fundamentals or macroeconomics or anything that like the brokers and the institutions use to actually place trades, you should check out Icon. It's a very, very cool product. They charge about $1,000 a month, but for $250 a month, you get that, plus you get Metastock. So it's a pretty cool deal. Okay. Metastock, like I said, is a huge toolbox. As part of what we're going to offer you today, we're going to include lots of training because this toolbox is only as good as if you understand how to use the tools. It's a great scanner if you know how to use it, right? It's most awesome if you fully understand how to use it. So because it's a toolbox and because we want you as a customer for a long time, we're going to include lots of training that our Unleash the Power of Metastock 14 as part of the overall package. I've got 3 minutes. The other thing that I'm going to do for you, we call this our extended trial. If you pay $59 per month, we're going to give you 3 months access. Okay. It's $20 a month to try it out for 3 months. Find out why it's been rated #1 every single year since 1993. It's just amazing that we've been able to consistently win that every single year. Same thing with real time. If you pay for a first month, we're going to give you 2 months for free. You will pay exchange fees for every month, though. We can't. The exchange fees are kind of like taxes. The exchanges insist that they have to be paid. If you have questions on what your exchange fees will be or kind of like what package is best for you or something, that just give us a call. We've got a really good group of guys over here that are not pushy. They're sales guys, but they're not too pushy. They're very adept with the program. They can answer any questions you've got. You can give them a call at 800-882-3040. You can also visit us at metastock.com/saleschat. I'm going to put my email address on here. If you have questions, feel free to reach out to me. I forgot to put it on the slide here, so give me just a second. If you have questions about anything I talked to you about today, please feel free to get a hold of me. It's a great product. I wouldn't trade without it. I'd recommend you try it. And $20 a month, literally, it's October 11th, right? So for $20 a month, November, December, January 11th, you're going to be running it into next year. I can't think of a better way to start next year in 2017 than to be trading with a product that's literally been the best rated product for 24 years in a row. So I don't see a lot of questions coming through, which is fine because I'm kind of out of time. Renee, let's go ahead and bring you back on.
All right. Thank you, Jeffrey.
I just saw your 2-minute warning.
I hope you feel better soon.
Raphael, you did ask a question, and I'll answer it real quick. Do you have candlesticks? Yeah, we do. In fact, one of the things that if you like candlesticks, if you like the stuff that Steve just showed you, we spent probably 2 years developing that all into Metastock, and it's been incredible. It's been well received. People have rated it very, very highly. It's an add-on product, but it's very inexpensive. Give us a call if you're kind of interested in it. And yeah, absolutely, you can do candlesticks in Metastock. It'll actually identify and label 32 different candle patterns for you automatically.